So, welcome everybody once again. I think we are having a good discussion here every week in our weekly macro call. So, thanks again for joining. So, I think today's agenda, which we had set up, was mostly discussing the concerns which everybody had around. Means I'm getting a lot of questions in private chat and other places that is the market done, in terms of bull market. So, we'll try to analyze that. We'll try to come up with, what are the factors we should watch to confirm that. That would be one of the agenda. And of course, as we always do, we feel free to ask questions and we can take it as it goes. So let me share my screen and we are going to look at where the markets are, first of all, just to make sure we understand. So I always start with, looking at a longer term chart. So remember, whenever you are drowned out by noise around day-to-day corrections and so on, you can always look at where we are in a longer picture. So I have been looking at the same channel, which is like, long-term channel of S&P 500. We have been looking at 200-day moving average, which is the green line. As you can see, that long-term channel support has been very closely commingled with 200-day moving average, which has been maintained for now. When I say maintained for now, we are getting tested on S&P 500 very, very closely. There have been last 2 days, both hit, to be frank, all 4 days. Last 4 days it has tested, but all 4 days we have seen it has bounced back from the below the 200-day moving average. So it's kind of looking flaky in terms of technical support around, which is, by the way, as we have discussed multiple times, if you're new to this, like 200-day moving average is one of the most popular support level, which everybody watches. And if you will see that it's very similar for Nasdaq, like every time it has tested this green line, it has bounced back. On the other hand, I think Nasdaq is for the first time or last couple of days, it has been weaker, and we are seeing that it is closing below 200-day moving average. I usually track the QQQ, which is the ETF for Nasdaq, and if you see, every time it tested 200-day moving average in last, I would say, multiple years, it has bounced back, and that is also a confirmation of how markets work from a technical analysis perspective. On the other hand, this time, yes, definitely there's a breach. Having said that, these things are not as accurate. As you can see, there have been breaches before. Like, let's go back historically. Yes, and if you see, once it breaches, usually it retests. And then when it fails, that's when we call confirmation, which was very valid in January 2022, which is like 3 years ago. And if you see here again, then it becomes a resistance. So again, few people had asked me about a little bit about technical analysis. My goal is not to create this a session for technical analysis, but you can see how well some of these indicators work in a long-term picture. So if you're trying to answer where are we at the bottom of the market, I think we cannot say yet. What we can say is that it has breached. Definitely it is concerning. Whether it will recover like sometimes it does, or it will retest and come back. That will tell us whether long-term trend is broken or not. And these things are very, consistent usually, and definitely not. You cannot just take a trigger out of it. Like, as I said, there are cases where it breaks. Like, for example, if you see S&P 500 did break down below 200-day moving average, and then on the retest, it actually recaptured it. This we call it as a V-shaped recovery. That is also possible. So as we always say, technical analysis is all about your ability to define probabilities. So my view is that right now, what are the other factors we can look at? The other factor which is very interesting is that we are at an oversold level. Very, very, these are RSI. There are a lot of other indicators similar to it. And if you see, usually when we have this much oversold level, and previously we have achieved the similar levels in October 2023, or let's say, like every time we have seen the bounce from there. So these are other things which we are watching. So I would say till this oversold condition is not resolved, if let's say market bounces back technically and coming back to in not so much oversold levels, that's when the confirmed breakdown is defined. So purely technical analysis, again, I would not say these are absolutely always a rule. These are mostly probabilities. Now, there are other things which I've been looking at is, I think we have a hand here, but just let me just say what are the reasons why the market is spooked. Of course, the tariffs and so on. But if you see, there has been a discussion about recession, and I wanted to first present this before we take questions. We have almost, like, if recession was a disease, we have almost eradicated it in last 2 decades since we started printing money. If you see, since in 2010s and 2020s, only 3% of the time we have spent in recession. And the reason being, and by the way, this 3% was during the month of immediately after the COVID crash and lockdown. It was also not a economic recession, it was because of the pandemic. And we quickly fixed it by printing money. So this is one thing which has given market the confidence. And what we are seeing first time in the Trump administration, they are talking about reversing this whole idea of government spending, reversing the idea of, that we will always protect the market by government stimulus. In last 15, 20 years, ever since 2008 happened, this is the first time where market is worried about it, that now probably this truly the time has come where they are serious. Now, you can always question whether this will happen or not. So big factor in my view is whether we have this recession happening is going to depend heavily upon whether you believe that there is a real possibility of government spending coming down or not. So that is where I think I'm looking at right now in terms of big picture view. What are the concerns? Tariff, I think we have seen that every time there's a tariff announcement, there are usually a renegotiation, delay, and market keep bouncing back and forth. But I would say the bigger concern market is dealing with and panicking is around this whole recession concept, which has come in, that are we now reversing this whole policy? And whether you believe in Dodge, whether you believe in other factors which Trump administration is leading with. Especially, I think market also reacted to the comment where Trump said that I'm not watching the stock market, which is like a pretty silly thing to react to. But I think market immediately crashed after that also. So basically, this is right now traders market. We are oversold. So that's a summary. We are at a critical juncture. We will next week will be very critical whether we bounce back above 200 moving averages on S&P 500, on Nasdaq, or if we keep selling off and we fail in this scenario. So feel free to ask questions. I think sorry for missing out on some. So I would let I think take the question in the order they came, and also you can put it in the chat if you have any questions. Please go ahead.
I can start if that's okay, Raman.
Yes, sure.
So this is more of a general curiosity and maybe not necessarily a long-term question, but I've always been curious how the algorithms react to like severe market reactions, right? Like, is there like uh, a more than, or is there like an abnormal formula or a reaction because of algorithms as well? Let's say it goes further 5%, 6% down from here, this particular chart, right? Do you know, do you have do you know at all like how these algorithms work, and if they do
Sure.
oversell at that time because of, a certain, just because there is math is not working at the time, right?
That's true. So I think, to be frank, algo trading has been a big factor of most of the market momentum, and which I was looking at some of the parameters. It's not in front of me right now, but these are something called CTA triggers, and which is basically momentum selling and momentum buying. You can simply put it in that basket. So which I believe had hit a few days ago. Like why we had repeated like continuous selling was purely because of momentum break. And some of the stocks, like whether you look at Nvidia, whether you look at, like we have discussed it before, it doesn't make sense for Nvidia to be like, Nvidia is almost becoming a value stock right now in terms of where their EPS is, where their growth is. If you look at some of the other, like even Microsoft, which has been like not, it has been correcting heavily. And I think this is, which has been because of momentum. And actually, this is a question which ties me into the next thing, which I wanted to show. Definitely momentum on the Mag 7 has reversed. I wanted to talk about this, so it's a great question which can take us into this. If you see, this was one of the chart posted, I think, on the Twitter feed of mine. I was just looking at it. So the Nasdaq, the biggest contribution is in the red. So by the way, just to understand this chart, the Nasdaq is down, which is the black line, and red is the contribution of Mag 7, and blue is the contribution of other stocks. So if you can see here, except for the Mag 7, the tech stocks, which were the momentum stock in last 2 years, Uh, Usually the picture used to be reverse. All the S&P 500, all the Nasdaq contributions in last 2 years were because of Mag 7. But we are seeing this year to date, that it's exactly opposite. Mag 7s are the one which are losing, and rest of the stock have only lost 0.23% of Nasdaq value. So most of the losses this year are purely because of these seven stocks. And these seven stocks have been in very high momentum. Momentum has reversed. So to answer your question, yes, it is purely momentum-based selling, which is it is algorithms triggering, and not even algorithms. Let me say there are multiple factors here. Remember that these seven stocks also have the biggest contribution to index. When people sell index, when people sell, when there are overall selling, these seven stocks are also the highest allocation into active funds. So when equity outflows start, these are the biggest stocks which get hit, and it creates further negative impact of it because they are killing the index more because of the weightage they carry. And this is exactly what happens when we have a heavy weightage of a few stocks. That is when the bubbles become bigger and the corrections become deeper. This is exactly, you can call it algorithm impact, you can call it an index impact, but you're right. These are some of the factors. But having said that, at some point, there will be active buying coming in, and the reverse will also play out, which played out in last 2 years. That when they recover, this is why we have these V-shaped recoveries also in some of these. Like if you see even the yen carry trade drop, why it became worse was because of the same reasons. First, it starts as a correction, which is because of fundamentals, because of certain one particular arbitrage trade unraveling. Then another one gets liquidated, and then the momentum triggers. That's why we have these kind of steep corrections these days, and and then we build back again. And similarly, we recover very fast. These are like so many of examples of V-shaped recoveries in recent past. So now I don't know if I answered your question, but yes, means definitely those always play a role. And there is never a reason, like we will never know. These are so complicated and there are so many different algo traders and there are so much different things at play that usually when they reverse, everything reverses and we get back to the same bull run again. Now, what we can do is make sure that when we have a confirmation, like for example, we would be very closely watching that if this break, for example, what was how did we confirm in 2022 that it was a downtrend starting? When it crosses down, very similar as you see here, we went down, which could have been doom and gloom, and suddenly we tried to do a V-shaped recovery, and then we could not go above 200-day moving average. Then we fell again. A lot of people came in because after a long bull run, usually people buy every dip. And then we saw that it was failed multiple times, and this was the confirmation. This is the maybe my old analysis where I had put this red mark. It was basically meant that it has failed, and now you have to believe that we are up for a longer downturn. So these are the kind of things I think we can analyze as technical analysis. Again, as I said, these are probabilities; these are not guarantees, because every time has slightly different. There is a money flow differences and so on. But basically, it at least helps us that to give some guideline to trade against and to build our portfolio decisions around that. So that is just what I wanted to say in terms of where we are in terms of, so again, I think we were going back to the agenda. What we were trying to analyze is the bull market over? I would say we are at an inflection point. That is my summary. We do have concerns, but we are oversold. So there is a bounce due. Whether the bounce comes after another 2-3 point drop, yes, that is still going to be oversold and we can be further oversold. Then nothing says that we cannot be more oversold than this. And one example can be like, India market. Means we did recently post this analysis of India markets, which has been for a change last 5-6 months. We have been totally uncorrelated with US. India market has been correcting deeply, but in last couple of days, you will see that India market has bounced back. And we had posted this couple of days back, I think, earlier this week, that this was a very significant technical analysis where we saw that the oversold level was at a critical point, which was we have never seen before, like very few times we have seen. And every time those were great buying opportunities. Now, these things are indicator of a local bottom, but whether the reversal plays out or not, that nobody can say. But your probabilities are higher, as we can see here. Every time we crossed below these 30 level, and we recovered. There were very few cases, and most of the times you had a reasonably good run in India market. So similar things you can analyze. You can do a lot of similar probability analysis, but you cannot be ever sure because there's always a worst case or a crash which is unique, and there are those factors. Usually, you can only see in hindsight. Mm, Having said that, like till the bull run is continuing, mm, there is a better probability to stay in the market because, as we have seen, there are more times when you will get a confirmation and you will bounce back, and there are only few times when it will reverse, and it will also give you opportunities to get out of the market in bounces later on. So it's not something which you have to panic. It's not something one should uh, look at as though there's a decision point to be made immediately. One can always plan it out. If it is going to be a 20-30% correction, you will have enough time where there will be bounces in the middle. Yes, right now it looks like doom and gloom, but I think one should look at a bigger picture view. And specifically, what we are looking at is whether big cap stocks, are they expensive? Are they facing any headwind or tailwind? We can discuss those at next. And that's why we keep discussing. I think we had a full discussion a few weeks back about AI trade. We had a full discussion around, what are the potential next tech growth areas. Those are the kind of things we can discuss to say whether there is something fundamentally changed which demands that we go and correct 20-30% on the markets. To be frank, means personally, if in a short answer to that would be I don't see that right now. So we have a question in the chat. How is the current downtrend compared to our last crash in 2000? I think 2000 is a long time back. Let's go and probably it will look pretty small at that time, the indices. And we are way, way above that. But I think we had a little bit of discussion a few weeks back around that is why 2000 was different, was because of the valuations. The hype around tech companies was way bigger than where like the multiples. Let's look at this is the I think we have looking at the 2000 chart again here. We had seen this kind of a crash from March 2000, and you can see that we had similar test of 200 moving average, and finally, when it confirmed that it cannot stay above, we had a pretty big crash. But when we say currently, we are nowhere close to that kind of a scenario at this moment. Neither I believe personally that the valuations are that high. Uh, of course, when I say valuations are not that high, I mean to say in the context of whether you believe in AI trade or not, whether you believe in technology progress. We are looking at GDP numbers being pretty good. We are looking at AI earnings continuing to grow. Means things can change at some point, but definitely the differences are that we are not looking at similar scenario where the earnings are not following or there is not real productivity gains. Means this was more of a bubble with from that perspective. And usually these things, of course, as I said, we are right now discussing like from a technical perspective that yes, there is definitely we were in an overbought condition. And if you remember, we had the same discussion 2 weeks back. We had talked about overbought conditions, and it took probably whatever 5-6% or 8% drop from there. And now we are talking about being in an oversold condition. So there are a lot of things which we need to evaluate over next few. I would say next couple of weeks will tell us technically whether we are there, whether we bounce back from this oversold levels or not. And from fundamental perspective, I think market consensus, which I'm reading when I look at analyst opinion and our own analysis, we don't see that we are in that kind of a bubble in terms of earning. We have some micro bubbles. We had, like, for example, Tesla had run away too much when it went to $480. And the interesting thing in the current market is that even before the rest of the market corrected, we were seeing some of these bubbles popping. We had Tesla coming down from 480 to below 300 level now. We have seen Nvidia been correcting for quite some time, even before the rest of the market corrected. So there have been rounds of correction. There have been cyclical movement from one sector to another. So usually these we consider healthy corrections, and the valuations are already correcting pretty much across the board. If you look at something like Google, if you look at something like Facebook, they are not very, like, Google is actually probably around 20-21 PE, which is very low for a tech company. If you look at Meta and Microsoft, they are not so overly valued versus the kind of growth they are showing. So I don't remember, but I think it's pretty reasonable in terms of Microsoft valuation. Um, it's like 31 P we are talking about. So overall, I think in general, we are not similar to 2000 in terms of valuations. We are seeing actual earnings. We are seeing P numbers of a reasonably good growth companies in the top seven, which are contributing highest to this correction, are not like a bubble popping. They're more like a correction. So that is my short answer. Any other questions? I think we can move on to other factors which we usually watch. I think one thing we watch is the yields, bond yields. As we discussed that bond yields were threatening in terms of the inflation concerns and so on earlier in January after Trump election all the way up to January. But since Trump's inauguration and new administration taking over, they have also corrected. So looks like that is also a pretty much not a threat, while they are also not crashing, which means that market is also not pricing in any kind of recession. Because if we are pricing in recession, usually the bond yields will go down very fast, and that's also not happening. We are probably in a neutral zone, um, and as we were discussing that if this happens, if the yields are crashing, if the recession is still on the table, you will see that there are enough tools, whether Federal Reserve can start cutting rates again. We can see again QT can be cut down. We are still doing, by the way, we are still doing QT, even though we have tapered it down. The rate of quantitative tightening is slowed down since last year, but still we are doing it. So there are a lot of tools from a Fed perspective. If we start seeing those numbers, even today, the latest unemployment number which came out were not as threatening, or like there was nothing negative about them. In fact, some of the numbers like residential constructions and the employment in that sector was actually doing well, which is usually a sign of a healthy market in terms of demand and domestic uh, consumption and so on. So a lot of factors, if we analyze together, there is nothing specific. And as we have been discussing for last 2 weeks, this was a technical correction which was due, and which we are probably at the fag end of it. And definitely it can get worse. But that is where we are not seeing that confirmation yet. One factor which I think a lot of people have been talking about and discussing is the yen carry trade, which was a big factor last year in August. Definitely that may have some contribution, but it's not as steep as it was, and people are more prepared because BOJ is not threatening to raise the rates right away, even though the yields are going up. So that part is still, they are giving enough time, and I believe that they are trying to control at this moment how they react. But definitely this is something to watch. If it starts going down, that can add added pressure to the market. And as I said, there are a few other factors like, how the market reads the latest economic data every week. We will keep watching and we will keep monitoring that. Um, Now, jumping into crypto and I think Bitcoin, as we mostly discussed that part. So this was a pretty big week for Bitcoin. Actually, means if you look at the how things have been moving, if you remember from last week of all the noise around strategic reserve, which Trump announced over the weekend, which brought us down from 80K level to 95K level, and then we very quickly went down again. So it has been a volatile market, but again, it is sitting at the critical 200-day moving average, which it bounced back twice. It did not close below it, and it is kind of holding stable. In terms of fundamentals, I would say it's definitely a very positive news when the strategic reserve has been finally put in place using the executive orders. And the idea there is very simple, that they are going to keep whatever they have confiscated. So just to give you a background, usually when in crypto domain, they had a lot of crime, which I'm sure a lot of people must have heard. That's how crypto used to be defined 10 years ago, that this is a digital currency only used for crime. Means thankfully the narrative has changed, because all kind of money can be used for crime, and there was no reason to label Bitcoin to be a currency for criminals. But as it happened, when US used to catch those people, and they confiscated that Bitcoin that used to stay in US Treasury. So now they have this executive order. What it does is that puts into a strategic reserve, just like gold. And just to give you a background, since we moved out of gold standard and for last 50 years or more, we have not touched the gold. It has been sitting there as a strategic reserve. It is still priced at the price it was in 1970s. And that means that, this gives it a special status. Now, Bitcoin is getting that status, same status as gold. And the narrative being digital gold is kind of validated at a world stage now, when a country like US says that now the Bitcoin stockpile we have is part of our strategic reserves. So it's a positive news in general. Market reacted negatively to it for two reasons. One is that there were kind of crypto lobby, and a lot of influencers were expecting Trump to go and create some kind of a buying opportunity. Means that was unreasonable, to be frank. Means I was never expecting that to happen in short term, because first of all, there is no law in place and you need a Congress approval for doing anything like that. So having said that, it's not off the table, because I'm sure there are a couple of laws already being proposed to purchase more Bitcoin. So this executive order has nothing to do with it, because the president cannot do that. Second part is that it has also put in a language to separate Bitcoin from crypto, which we have been talking about for every time we had a crypto discussion. I always said that Bitcoin cannot be combined with others, because Bitcoin has a narrative of digital gold. It is much more, acceptable as that narrative, and all others are not in that category. So they made sure that they very clearly demarcated that Bitcoin is a strategic reserve, and the digital asset stockpile, which they have talked about, that has been kept totally independent as and again, that is a confiscated assets. That is not something which US government is buying. The third part, which you have to understand if you are invested in Bitcoin, is that the executive order talked about budget neutral ways of acquiring more Bitcoin, which can mean, like, just like what, if you remember, when Tesla had started accepting Bitcoin, they bought Bitcoin and they had also started accepting Bitcoin as a payment to buy cars. That used to go into their treasury. Now that can be considered which is like, there can be hundreds of ways where US government can find ways to define those kind of things, where they can make certain payments made which are not tax payments. The only thing which needs congressional approval is the tax usage, which is the revenues of the government. If it is in some other category, for example, Trump has talked about this gold card which you can buy to buy, US citizenship. But if they say you can pay in Bitcoin or you can pay in dollars, and they can keep that into strategic reserve. So there are a lot of ways where they can create this, because this is a very pro crypto administration. There are a lot of things which are possible. So in general, I would say this executive order has been a smart way of implementing, where they made sure there are no legal issues while still creating a strategic reserve and creating an opportunity for the administration to look at other ways to add to this stockpile. So that is where I think we have pretty good. I would say this is a good result for Bitcoin community. What has happened here? So that is my take on Bitcoin. I think, again, on the other hand, technically, yes, it is looking kind of in a correction mode. We are taking support at 200-day moving average, and we will see how it goes. Because in terms of what is impacting it is also the negative ETF flows. And I think let's look at that quickly. We have kind of topped out on the ETF flows. And if you see here, yeah, this is the chart. So we kind of topped out in towards end of January, and we are seeing, like, you can see here, we are seeing some outflows now. And these outflows have been very consistent through whole February. And that is one of the reasons which we are seeing as some correction happening. And this we will be watching carefully. So if you're talking about, okay, what are the indicators, whether the flows turn around, we will have to watch whether these ETF inflows start again, or if there are any other. We keep hearing about, now that US has declared strategic reserve, as we also discussed that Texas Senate has approved adding Bitcoin as a strategic reserve, and they don't have existing Bitcoin, so they will have to buy it to create that reserve. There are many 15 to 20 different states in US which are trying to create similar reserve. there are corporate treasuries. MicroStrategy is very well known, and there are at least 3 or 4 companies every month I hear who are creating similar reserve for corporate treasuries. So there is always a demand right now, and with approval from US government, I think this will become a stronger narrative worldwide as the people start reacting to this news. So that creates a fundamental tailwind for Bitcoin, which is a great news. So this is my take on where we are in the cycle on the Bitcoin. But if you see here, most of the assets are still correcting right now. While gold has been in a bull run, we have seen some correction in gold and kind of stabilizing around 2,900. But in general, there is none of the assets which are seeing any kind of inflows right now. So the US 10-year had absorbed a lot of these inflows. And I think that is something we will have to watch, whether people are moving money into bonds now. Is it this one of the reasons why I think we can see yields going down? And when yields go down, the cost of capital goes down. That creates also a kind of a stimulus effect on economy. So at this moment, I think we are probably in a technical correction with things are auto-correcting itself in terms of overvaluations, in terms of yields coming down. So we are probably going to see things materialize in next couple of months, whether all these things point to a bull run continuing or whether we find something to create a reason for going down further. So that's the summary of the market. So again, I would recommend people to, you can raise your hand or you can put a question in the chat. We can take up more questions here, but we have tried to answer today whether we are in the end of the bull market or we are just going through a correction. I think that's how we see. And just to summarize, we are at an inflection point again for people who are just joining. And we are looking at whether we can sustain these technical levels and bounce back or whether we continue going down. So there are a couple of questions in the chat. Let me take them. What about the health of earnings so far? Are they showing year on year? So I would say the earnings have been not okay. So let's split the question into two parts. One is as we have discussed that mostly the stock and the market was growing from a tech perspective only. It was not a wide bull run in last 2-3 years. What we have seen, it's mostly either AI trade or most of the tech companies. From that perspective, we have discussed already in last few weeks, or even when the hyperscaler earnings came, when the NVIDIA earning came, we had a detailed discussion. Those earnings are looking great. We are seeing spending increasing. We are seeing even something like Meta or Google, all of them who are able to monetize these spend whatever is happening in the AI space or in general. What we are seeing, even the GDP growth rates are looking very healthy for US. So definitely no obvious concern is there on earnings or at a macro level. The only doubt people had is, and again, this is a fear. It's less about the fundamentally something changing. I think the biggest fear and overhang on the market is what we are seeing in tariffs and potential inflation impact, which again we discussed in our WhatsApp channel also, that there is no direct component of inflation which is impacted by tariffs. There is a huge component of housing market. There is a huge component of the energy prices are coming down. So there are a lot of things which are actually working in favor of the market right now in terms of inflation numbers. And there are a lot of things which are probably just a fear more than actual data, which market was reacting to. So having said that, I think I don't think there is any specific negative macro data which we are seeing yet. I have another comment in the chat which says Oracle earning on 10th. Whether it can, make or break. I think every earning matters in the AI space because it's a sentiment which matters. But to be frank, means we have seen already enough in this space that AI trade is purely a correction right now. And whether it is NVIDIA, whether it was Microsoft, Google, or Meta, or all, they were all showing great earnings. So it will be very surprising if they don't deliver good. But on the other hand, because most of these hype has been built up, we may continue seeing market reacting negatively to even a great earning. So market is in a technical money outflow stage right now. After we saw November and December after election being record inflows. So I think it's more about money flow right now and less about fundamental earning issues or anything like that. So whether money flow continues going out is anybody's guess, because those are the things which you cannot foresee. And that is where I think I would wait for making a comment. But we are open to, if anybody wants to make any comment on that, that we can definitely discuss that. So, I see another comment here. Due to tariffs and retaliatory tariffs, which Trump has always believed in, CEOs may put off spending and earnings may take a hit. Um, Definitely, I think that can be a factor, but in terms of when we say spending, right now, um, most of the software companies or like enterprise software has not shown any major slowdown. These, but and also when we look at spending in tech space, and let us also be very clear, in modern day, uh, that most of the index is driven by tech. We are no longer a market which is driven by old economy like oil and gas and uh, whether it's like consumer companies and so on. Most of the index is built up of tech stocks, and when that is happening, means none of these tariffs have actual impact other than Apple probably, or the chip companies, which are probably getting threatened. For example, like Apple, there was a discussion around they will be paying on every iPhone brought in from China. So I think these are the individual companies which may deal with the tariffs, but at a tech spending level, I fail to understand how tariffs will impact the CEOs changing their spending. But yeah, I think I'm open to ideas on how we are analyzing this. But in general, it's more about uncertainty. It's more about market usually reacts to when you are already at a reasonably good valuation, when you don't have any major triggers, and then if you see uncertainty, yes, that can at least change the money flow, and that can people can run to safety. So I agree, there is definitely a negative story going around because of all the tariff narrative, and because of more importantly, the Trump style is very unsettling for the market, because every day you see, one day they are tariffs are there and next day they are delayed again. So those kind of things are definitely not what market likes. And as we are seeing with VIX also, the volatility has been going up in last few days. So market is definitely concerned. But every time we have seen this in past, when the volatility has gone up, usually money flow has come back and taken the market higher up again. So in terms of whether we can see this as a signal for a bigger correction, I don't know yet. Means there is no confirmation on that. And the other question I see is that whether there is a washout in terms of volumes. I think we have seen significantly good volumes on both sides. Whenever, means after sell off happened, we had a pretty decent buyback also in last 1 week itself. We have seen multiple volume cycles of both buying and selling. So it's a churn, I would say, right now what we are seeing in the market. It's not a consensus yet. So I would only call it as a inflection point, looking at the data which I have in front of me. But if there's any other indicator anybody's tracking, we can discuss that and take into consideration. But at this moment, if you see, and specifically as we were looking at the chart earlier, the every time we have tried to close below 200 moving average, we have seen a lot of buying, which has come in at the close of the day. So there is definitely, and that volume is looking very healthy in terms of when market is looking at buying the bottom. So it's not a kind of a consistent narrative either, but net inflow is there. No, sorry, net outflow is definitely there in equity, in crypto. So we are seeing, when we see the net ETF numbers either in equity or in crypto, we can clearly see that there is a reallocation happening. So that is where we are. All right. So I think in terms of our agenda, I think we don't have anything specific, so I will take a few more questions and we'll try to uh, respect everybody's time here and evening. But again, thanks everybody for joining. And we have this a couple of more questions coming in. Do you think European selling bonds of almost 1 trillion over time will it help US tech? Yeah, so I think that's a great question because what we are seeing now is US is kind of stopping, like US is in this whole, we can call it almost like a austerity drive, where we are talking about Doge coming in and saying that we are going to cut federal jobs, we are reducing the spending. And especially when now US has stopped the Ukraine war spending. And Europe is coming and saying that they are going to put up $1 trillion of new spending into their defense. You can consider this as very similar to what US has been doing all this while as a stimulus or a federal, just like we had this whole government spending stimulating the economy. And what is happening in last few days, you will see that Europe stocks are going up and everything is rallying in Europe right now because of this. Because now you're talking about Europe, which used to be more conservative, it's actually doing a very good, uh, kind of US kind of policies now and filling the gap for US. My view in that is that probably it will not have any direct impact on US. Definitely, it helps the global companies. Any kind of spending increase helps your tech spending, defense spending, which is going to help you. Even US defense stocks, Europe stocks definitely are already moving up and reacting positively to these kind of things. And then I would say there are always trickle down effect in the economy, whether it is Bitcoin, gold. When you print more money, when you stimulate the economy, it always has a trickle down effect across the asset classes. So whether it's China, whether it is Europe, uh, while US is in a contracting mode right now in money printing, after, of course, record breaking money printing since COVID. So it's not that uh, we are we have any lack of M2 either. So I'm not suggesting that we have any means we are not in a money reduction phase in US, but global money supply is increasing because not only Europe, I think I should also mention here that China is had a big convention, like the usual political convention, and they talked about how they are going to have the record deficit. I think I did post it in the WhatsApp group also. So China is also uh, trying to counter the tariffs with a pretty heavy spending and increasing their deficit targets, which means that they're ready to stimulate and spend more. So Europe, China, all of them are in the expansion mode now. They're looking to stimulate and print money. So that will definitely have a trickle down effect in terms of helping the market. Then I think we have a few more questions around will the dollar go further up? I think dollar has peaked out after the initial, I think Trump election. We had the dollar index was kind of peaking out around 109 or so, or 110 also it hit. But right now we are going through this whole correction phase. The reason being that market is now becoming a little more positive on other currencies, and especially if you see, it's very difficult. Like currencies are relative, right? So when we talk about Japanese yen, it is getting stronger because there is expectation of them raising rates, their yields are going up. So yen is strengthening, euro is strengthening because of the stimulus and expectation of economic growth coming back to Europe, which has been pretty slow, and they have been bogged down by regulations, they have been bogged down by industrial slowdown, and this whole stimulus can help them. So there's a little bit of a kind of reversal happening on the currency side outside the dollar. So I think that is where um, I don't think these things are going to have direct impact on dollar either strengthening or weakening because there are counter effects of that. In general, I would say dollar against yen is the biggest factor because that's the biggest credit market, which is not only impacts the amount of money which is deployed into US through the yen carry trade, but also it is one of the biggest basket element. I would say Japan will keep the lid on how much US dollar can rise. And second thing is the US in general. I think there is nothing means of course if the US can really show a path for fiscal reduction, can they include fiscal deficit reduction, or if the Dodge and all this spending cut which Trump administration is promising, if they really happen, that definitely is a path for dollar strengthening. If the yields, but on the other hand, that is also resulting into yields coming down, which usually has a negative effect on dollar. So I think the dollar right now probably has hit a little bit of a peak in my view. And if the US 10-year yield keeps going down, we don't see a path to dollar strengthening at this moment. Then we have a couple of comments on semiconductor stocks. Let me just read through those chat messages. So there is this one comment on NVIDIA's market cap after correction still ranks the 8th largest economy. So I don't have any specific thought. Yes, NVIDIA is huge. And when you look at market cap, it is huge, but I don't see why that should be a consideration when it's about the valuation in terms of how much their cash flow they're generating, how much earning per share they're generating. Is that justified valuation? We have discussed it enough, I think, in last few weeks. I would say there's nothing which, if they can maintain this level of earnings, or if they can continue growing the way they're growing, it's actually cheap. Means there's nothing which says that Nvidia cannot be a 10 trillion company. And nobody thought $1 trillion was possible 10, 15, 20 years ago. After Apple crossed that barrier, multiple companies crossed that barrier. Maybe some company someday will cross 10 trillion barrier one day. And then today it sounds like unreasonable, but that's the world. Means we are seeing complete domination by one company, and that there have been cases where one company can become so big. So I would not worry about the size and market cap driving the cap on how far they can go. Means we are seeing richest men in the in the world. When we say richest people in the world nowadays are uh, not at the same level where they used to be 20 years ago. So it's about the amount of money. Numbers keep going up. All numbers keep going up. That's the whole concept of when we talk about money printing and the growth of global money supply. That makes everything more expensive. That's what creates inflation. So I've never measured a cap on a potential growth of a market or a company based on just the absolute number. You have to look at the relative value. That would be my comment on whether NVIDIA is 3 trillion or 10 trillion, depends on whether they can really grow the market, and less about why it cannot happen. All right, so let's take a quick couple more comments and questions, and feel free to raise your hand if you want to add anything on these topics. So I see a comment on budget talks coming up. I think budget uncertainty is, I feel it is less because there is some enough um, ideas we have seen in terms of tax cuts continuing and so on, and there is no real path to cutting down fiscal deficit either way. I think what I see Trump is doing is he's trying to build his legacy around low tax rates, and justifying those because that is not feasible anymore because of the deficits. They're justifying it by showing all these job cuts and all kind of things. But in general, I don't see things changing in terms of like they talk about budget balancing, which will be amazing if they do it. On the other hand, it will be very negative for the market. Means imagine if the deficit is going down, or if it becomes balanced budget. What that means for the market is that you are looking at a net money supply is going to start shrinking in US, which I don't see how that is possible. Means that's going to create recession that will not be popular measure either. So I don't think they're going to do that. They're going to probably negative effect of the federal job cuts is definitely expected. But even that, if you see last couple of days, there have been clarification that they are slowing that down. There have been enough pushback on that. Now that I think Musk was going very fast, and now Trump has already given it to the cabinet secretaries to go and lead that while taking Musk's opinion. So they are probably going to slow down on that also, because they understand that neither it's a popular move or nor it is going to help in long run to win the popular opinion. So I'm not too worried about the budget. I think US government and overall budgets don't change much, whatever policies you do. And then finally, I see another comment around. Uh, I think we have covered most of that. So yeah, I think we have taken most of the comments. If you have not been taken, please comment again. Here, I don't see any other messages. Yeah, I see a hand here. Let me bring the name.
Hey, Raman.
Yeah.
Question switching gears on crypto a little bit. I don't know if you've covered this in the past, but I started reading about XRP and seems like the Swift networks are using more and more of XRP and the popularity in that network is growing. I was wondering if you are tracking it at all, uh,
Mhm.
if you have opinion on that, and does it fall in your recommendations? I guess we don't talk about recommendations here, but yeah. So if you can
Yeah.
give me a sense.
So I can talk a little bit about it because I used to track it very closely, and we do keep hearing about this. There are two issues with any cryptocurrency which is outside Bitcoin world. It's almost like a VC run operation, a lot of privately held tokens. Um, in Bitcoin world, we have very clear, a natural growth where people who mined it, they kept it. There was no allocation. There was no. So it's very much like imagine you have a XRP Foundation owns a lot of tokens. So these are the problems which exist. So technology ramp up, yes, that's you can invest in XRP almost not like a crypto, not like a store of value or anything. It's purely a investment in technology. Now, coming to your question on, yes, there are a lot of discussions around XRP technology being used in interbank transfers and so on. But let me tell you what is so special about that. When JP Morgan created their JPM coin, which is doing exactly the same thing. They have created their own private blockchain, and Chase is settling everything through JPM coin across interbank. So there are a lot of like big banks, they are still going to continue, like there is nothing stopping them to create exactly replica of XRP. We discussed this in the context of Bitcoin. Now, Bitcoin is different. Now you are talking about there is a gold, and then you say, oh, I like, silver better. You can like silver better. You can use it for industrial purposes, and it is going to serve better purpose. But you cannot replace gold because it is accepted as gold. So Bitcoin story is purely based on a store of value. All other crypto, they are technology. And now all the discussion we had when we were talking about Bitcoin exists there. There is nothing stopping you from creating another XRP. And we have already seen the instance specifically in the context of interbank transfers where this happened 4 years or 5 years ago when JPM coin was launched. And they have been using that for interbank transfers. I know that there was some test networks launched in India on another XRP kind of a currency called Stellar Lumen, which is it's also open source. Not XRP is a little bit, it was developed under a closed source kind of a model. But and again, I'm not very good with the XRP technical thing, so take that with a pinch of salt. But now you're talking about there is no real reason. There is no real reason. Yes, if at any stage we see signs of all big banks, and especially US, means banking is mostly controlled by US because USD runs the whole world. If I see any big US bank saying anything positive about XRP, I will change my opinion. Till then, I think it's a kind of too overvalued. Secondly, the biggest issue with XRP token is that it's held by private entities like XRP Foundation and a lot of people who are private people. So it's almost like thinking about what is happening with Palantir or something, right? Where the early founders or Peter Thiel and all these people are dumping while the stock is pumping. So you don't know what is the real investment case here if they will keep dumping on you. You are basically relying on long-term adoption of the technology where the biggest banks like in US are not signaling anything like that, and they're creating their own blockchains and they're creating their own coins. Does that answer your question? Yeah. So I
Sorry,
think
I'm not able to.
yeah,
Once
I
I unmute
understand.
myself, I'm not able to go back. So, but yeah, I did. Thank
Yeah.
you.
All right. No, I think so. This is where I think what we have seen I was pretty big on, like we even had a blockchain venture fund. I was part of that, and we had done a lot of significant development. We had an incubator in blockchain space. So I have a lot of history with various blockchain projects. So don't take me wrong. I'm a big believer in blockchain technology. We have invested in a lot of blockchain companies, and I've been involved in that, funds where we have done it. But what I'm trying to highlight here is that after all that learning, what we figured out is that as an investor, it's a very different ballgame. If you're developing the technology, if you are launching your own company, it's a great place to be. But if you're as an investor, I don't want you to go into these narratives without knowing the risks which are which are involved, because it's ultimately the crypto domain is very unregulated. If a founder is dumping their tokens, there is no similar rules which are there for a public company like Palantir, as they have to declare ahead of time they're selling and so on. These kind of things don't exist in crypto. So those are the risks which you carry in most of the crypto projects, where there is a who owns the tokens is the biggest issue. So, all right. So I think I think we are at the top of the hour, and thanks again for a great participation and good questions here. And again, going back to please invite your friends into the group, and we can keep increasing the community. There were a couple of good polls. I think people wanted to meet in person, which supposedly this week we were supposed to meet, but I think the time and place did not work probably. So do give your feedback. We will run a poll through our admins and see if we can get to a consensus. Looking forward to keep engaging and continuing to generate value for everybody here, because we are spending a lot of time on a Friday evening. So hopefully we can make this thing happen and grow this community further. Thank you. Bye everyone. Have a great weekend.